Hello, I'm Eric Garfield, MAI, a designated member of the Appraisal Institute. I've been appraising roughly 20 years, primarily in the capacity of estate taxes, estate planning, or related. And I'm the Southern California chapter of the Appraisal Institute's co-chairman of the IRS Valuation Summit.
I'm Terry Dunkin, an MAI, SRA SRPA designated member of the Appraisal Institute. During my nearly 40 years of experience as an appraiser, I have spent a considerable amount of time doing valuation for financial reporting.
There are plenty of opportunities for appraisers to work with the Internal Revenue Service in tax-related issues. Among those opportunities are in estate taxes, gift taxes, and with conservation easements. Other examples include historic preservation easements, partial interests, and work directly for the IRS for a multitude of property types and purposes.
Penalties do exist, but typically they are manageable. Usually the biggest problems come from highest and best use analysis that is incorrect or non-existent. Appraisers need to write clearly and succinctly. The IRS is looking for reasoning. A 50-page trade area analysis will not usually help your case with the IRS.
Appraisers seeking assignments within the IRS's valuation group have several opportunities. With the Small Business and Self-Employed Division, the Large Business and International Division, and the Tax Exempt and Government Entities Division. Appraisers would also be wise to establish relationships with attorneys who handle work for the IRS and lawyers who practice in other tax-related disciplines, as well as accountants.
Some appraisers believe that there's an approved list involved with doing work for the IRS. A taxpayer can use any appraiser for a valuation to be submitted to the IRS. However, under certain circumstances, an appraiser may not be usable for IRS assignments if they've been penalized for faulty work. There's also a misconception that the IRS uses only employees for valuations. The IRS often contracts with private appraisers. They require potential contract employees to be approved in advance, but there is a significant amount of work potentially available for appraisers. Another important misconception is that the IRS requires adherence to the uniform standards of professional appraisal practice, commonly known as USPAP. Actually, the tax court recognizes USPAP as a valid guide, but not as a requirement. However, most IRS employees see lack of USPAP compliance as a big red flag.
When writing appraisals for the IRS, one should assume that their work is going to wind up in front of a tax court judge. Appraisers should make sure their appraisal reports explain adjustments, assumptions, and methodology. Don't make a review or have to work to understand what you did.
Anyone interested in learning more about these issues can find information on the Appraisal Institute's website.